Back to episode 25 of VW Exchange, a cross-Atlantic episode of VW Exchange nonetheless. And we're super excited to bring this to you.
We're back. Time difference won't slow us down. Back to bringing you the updates, everything that's going on out there. So excited to jump into this one.
Yeah, and I guess I mean it's been a little bit since we've like talked about just general market conditions. So this is more James's wheelhouse than mine, but if you just want to give us like an update on kind of what's been going on in the past month or so.
Yeah. So I guess we talked a little bit about Venezuela last time and kind of the implications on oil and what it was doing to treasuries and trade. And recently, the new topic has been Greenland, owned by Denmark. Trump wants it, claiming that the US is the only one who can defend it from China and from Russia. And as kind of global warming picks up and these Arctic routes start to open up and actually melt, there's a lot of potential security concerns in that region. So a lot of that's been happening. There were tariff threats, and then they were pulled back, and there were threats of using force to take the island. And all that kind of rattled the markets, but we're back at kind of a baseline level. S&P took a hit for a brief moment. Treasuries are pretty steady. And now we got a big week coming up. Fed rate cut decision on the 28th. It's looking likely that we're going to hold rates steady at the moment. Um, 2 quarter point rate cuts expected for 2026 in general. But for now, it's looking like we'll see what's kind of going on. Inflation's still a little hotter than expected, but and we also have some big earnings coming up. So Tesla, Starbucks, Amazon coming up the next couple of weeks. So consumer discretionary, we're going to kind of see how the global consumer is doing, which is going to provide us with a lot of insights for what this year is going to bring. And also some other tech names. We mentioned Tesla, I believe Microsoft's. So it's going to be a big week.
Got it. Yeah, that does sound like a big week. And no, that was a great rundown. I think that focusing on earnings too is going to be super important because I think that what's kept the rally alive, so to speak, is the earnings. Like despite all of the
Mhm.
geopolitical uncertainties, and I think that I mean to what you said, what we saw around Greenland is I think the S&P 500 had one of those really bad days around the beginning of Davos, that economic conference that all the big CEOs and political leaders are at. And then I think that Trump and the EU kind of were able to get to some mutual terms. Some might say that Trump kind of backed down on his original premises. So I think that that was something that is good for the U.S. moving forward, but something definitely to monitor, and also how treasuries and the dollar are moving in response to those events. Because at least when I was following it, I saw that like the 10-year treasury got above 4.3 when that event was happening, and so checking out the bond market, and I saw that a Danish pension fund is pulling out of U.S. treasuries too. So making sure that there are still investors out there for U.S. debt, obviously important too as these things kind of continue to unravel because as we've seen in the past and what we've kind of stopped seeing is that usually when there's chaos and uncertainty out there that people fly into US debt and yields go down. But as that doesn't happen on more and more occasions, that's maybe another alarm bell.
Yeah, no, good point. I saw that same thing, the Danish pension fund. I don't know how significant it was. I believe it wasn't an insane amount of money in the grand scheme of things, but still, when you're having these international foreign companies and pension funds, institutional investors pulling away from U.S. debt, and we've seen the dollar continuing to unravel. Um, it's not a great sign. But maybe as we talk about the dollar unraveling, we can bring up this other story that we got going on.
Yeah, yeah, I can give the brief overview on this one. So this was a story about the yen had a sharp, I believe it was appreciation recently, and what happened was just for the general sort was that the Fed basically through the Bank of Japan like did what's called a rate check and called around to different financial institutions to figure out what the exchange rate is. I'm not sure why that's something that they have to call to do because it seems like that's publicly available information. But what it's forecasting is that maybe that they're going to take some actions, either the Bank of Japan or the Fed in tandem, to try and figure that out and trying to figure out how to raise the price of the yen relative to the dollar. Because one of the things that's tough if you are a Japanese consumer right now, is you're going out to the market to buy oil, you're going out to the market maybe to buy electronics, Apple products, etc. And your yen aren't worth as much, and that's going to make it even just more and more expensive for you to buy stuff. But as we've kind of seen, like talking about the US, and one of the reasons why the US wants to depreciate its currency is that, the yen being weak is good for its exports. And if you think about companies like Sony or Toyota, the Japanese automakers, that if their products are cheap overseas, that they're going to be able to hopefully sell a lot of them. So it's kind of a give and take between when these countries are trying to set their policies of trying to balance what their consumers want and what their corporations and their exporters want. So I thought that was kind of an interesting story to touch on too, because there just some interesting dynamics for that. I don't think that we've got to always.
Yeah, yeah. And it sounds, as you mentioned, like what the US is doing is maybe a lot of people speculate. We've talked about this before, but maybe the Trump administration wanted to devalue the dollar so we could boost exports. But something else that I thought was interesting to note is just kind of talking about the carry trade and kind of why this is a common thing that's been happening. The yen's been getting crushed for months. This is essentially because the US has been having higher interest rates. So if you're looking to park your money somewhere, you'd rather put it in the US where you're going to get, 3, 4% versus the yen where it's near zero. So around 1%. So that changes, where money flows. And that's kind of what's been devaluing the yen. But if they, as you were mentioning, all the calls they're doing with all these Wall Street firms, um, that's a funny concept to me. What do they call it? Rate checks.
Hmm.
Uh, so the fact that they're doing this, it seems like they're going to move in the direction where they're going to start bumping up rates, and basically investors are now going to see investing in Japanese debt as a more attractive place to park their money versus the US. So just a little bit of the math behind it.
Yeah, yeah, and I think that's super important to kind of understand the mechanics there too. And I think one of the reasons why it's been hard for Japan to increase its rates is because they have kind of a lagging economy that is dealing with deflation, that they don't keep rates super low, that there's just not enough demand. They have this aging population, so there aren't going to be enough people out there buying their products. And so that's a concern for them. But kind of on the flip side, like when you talk about this carry trade dynamic, is that yeah, their currency does get crushed because I mean there is kind of that differential that yeah, you're going to park your money in U.S. assets that are yielding 4% relative to the 25 basis points that Japanese ones are. But there are also these hedge funds that are going out and saying, okay, if I can borrow in Japan at point 25 basis points and then invest in the US at whatever 4,000 basis points or 4%, then you just get to capture that spread again and again and again. And so I think one of the things that we've seen whenever there's like some sort of event in Japanese monetary policy, that people like freak out. And so that's why you see like that big drop. And we'll see like what actually ends up coming about it. But maybe I can just read this quote too that I kind of liked. Um, Neither U.S. authorities or Japanese authorities seem happy about the value of the yen right now. Everyone is on a hair trigger for something that will change it. This is a guy named Jason Furman, used to be working with the Obama administration. So I think that there is probably going to be a solution here because, like to what you said about Trump wanting to depreciate the dollar, the Japanese want to appreciate the yen. It seems like that those interests likely like match up. So hopefully, they can come to some mutually beneficial agreement there.
Yeah, no, good points, good points. And I like how you kind of brought up what's happening in Japan, this low birth rate, aging economy. They're looking for a spark, and maybe that's something else to consider, or what a lot of people are considering. Not that Japan is going to really default on their debt anytime soon, but I'm sure that's something you think about and worrying about the quality of US debt too. I don't know how much in question that really is, but maybe that can flow naturally into this other story when we kind of had this blow up happening, tariff threats, everything that's been happening. Um, People are going to gold. They're not really going to the US treasuries, which is very interesting as we were talking about before. Usually everyone flocks to US debt. It seems completely safe. But people are buying gold. It's had its best week since 2008 in terms of price appreciation. And Bitcoin hasn't been doing great either, even though we could talk about that more. But when you're talking about these safe havens, it seems like gold is becoming the staple right now.
Yeah, and I think that I think maybe just focusing on the contrast with bonds is that, and one of the risks out there when you have, or one of the potential risks is that when you have a system with so much debt and so much government spending and fiscal deficits, is that these countries are going to try and print money to get their way out of it and to try and make sure that their solvency liquidity is where they want it to be. And so that puts the bond payments in jeopardy that if there's 3% inflation, you're getting a 2% coupon, then you're losing money to hold that debt. And so when people look at something like gold, which on the contrary to bonds, like isn't a cash flowing asset, is just an appreciation tool, is still something that they think that potentially the yield of that appreciation, other people flocking to gold is going to be greater than what it'd be owning bonds. So I think I mean, to me, that kind of speaks to just all the debt in the system and the worries about potential inflation. So that was kind of my read, but I'm curious to kind of hear your thoughts and even on Bitcoin too, of like how you think about those three.
No, that's a brilliant point. I mean, it really says something. You're not getting any coupon for holding gold. You're just like, okay, this is gonna appreciate in value so much. Or maybe it becomes more of a fundamental issue with the currency, as we were talking about. Um, of course, the United States is running some huge deficits at the moment. Debt is becoming expensive. A large chunk of debt is going strictly to interest payments on former debt that we've issued. So there is this issue happening there, and I think that maybe some people could be losing faith in the currency. Is that I don't know if that's a completely valid take, but it seems like people are going to gold, just feel like it's safe. It's always going to have some sort of intrinsic value, and it seems to kind of be a consequence from massive debt loads. But also on the point of Bitcoin, it doesn't seem like people are flocking there. People don't seem to have that same confidence as they would gold. Gold being that physical commodity versus Bitcoin. Maybe people don't understand it, or maybe it really isn't as great as some people make it out to be. But I don't know. Interesting stuff.
Yeah, I mean the Bitcoin thing is hard to kind of reconcile because like on one hand it does have a lot of these other benefits that gold seems to have is that like when you're worried about I don't know, different interest rates between countries and different exchange rates between countries and like what are my dollars going to be worth 2 years from now or what are these bonds going to be worth 2 years from now? Bitcoin also seems to not care about that stuff because there's just a finite limit and you're also just hoping for the appreciation, but it's almost one of those things that when there's so much uncertainty out there, that parking your money in something that has been shown to, like historically, has just had a lot of volatility, and also the future is very much unclear about, whether it's actually going to be used for anything widely adopted. Because I mean, once you reach almost a critical mass of people who you know, have agreed upon that Bitcoin is a store of value, like it'll get there, but it's tough to think that people are going to flock there in moments of uncertainty as opposed to where there definitely is certainty with gold that has been time and tested over thousands of years. People, cavemen wanted gold, I would imagine.
Yeah, no, exactly. So gold is always going to have this clear purpose, this clear value, and this is more of a philosophical argument, but I think there's something to be said for the quality of gold versus something like Bitcoin and even um, treasuries. Maybe people losing confidence in the dollar, which is a weird thing to consider. But Just a few talk data points I wanted to mention. This article is from MarketWatch. So, Bitcoin fell 3.8% on a day when gold rose 3.7. This was recently during the Greenland negotiations, and Bitcoin's volatility has been 4 times greater than gold's. Um, and basically, what MarketWatch was saying was, how can Bitcoin be a substitute for gold? How can you kind of move them interchangeably when one zigs and the other zags? So, interesting points. And they even call Bitcoin a risk on asset versus gold being a risk off. So that's just, MarketWatch's opinion, but it does kind of seem to be this way given how it's been moving.
Right. No, great points. Great points. Maybe we can get into this. I think Intel's the next story that we have on the docket. Is that right?
Sure.
Uh,
Yeah.
so this was kind of an interesting moment to me. I'm an Intel shareholder by accident, so take with that what you will. But they had a particularly bad day. I think like they closed down around 18% of what they opened at. And so they had an earnings call where they had to deliver what was a pretty challenged outlook that I guess in the next quarter that they expect revenue to be down both on their client sales of chips, on their data center sales of chips. And it seems to be mostly a supply-driven phenomenon that they just can't get enough product out to market that people want or that people are willing to pay for. And this is a company that's also just trying to figure out kind of where it fits in this AI new technological system. They're historically known for making these CPUs contrasted with GPUs, which are what NVIDIA and AMD and others make. So they're just trying to see like how they're going to be able to make sure that their business is going to endure in that kind of era. And one of the things that they floated is trying to get this foundry business online, where similar to if you're familiar with a company like TSMC, who designs chips on behalf or manufactures rather chips on behalf of NVIDIA, who gives them a specific design and produces them. Intel's trying to get that business online, but they're just kind of saying like, whoa, 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 this is gonna take a lot of time and a lot of effort. So they're kind of putting the brakes on people's expectations when people were hoping that this was going to be a quicker turnaround than it seems like it's going to be.
Yeah. Yeah. And that was kind of the message from the earnings reports. Like, this is an ongoing journey that we're having. And I think that you could even maybe see this from a positive perspective and say, all right, they misjudged the demand. But if they have more demand than supply, I think that's a good sign for at least future movement. And as we are talking about kind of this foundry business, they still need a major customer to make chips for. And they said this might not happen until the end of 26 into 27. But if you have a company that's backed by the United States government, that's a pretty appealing place to have your chips designed for you. So I think that there's a lot of hope here still, and um, maybe wanted to raise the question. I think we already know the answer. It's probably too early to tell, but is this evidence that, maybe in the US government picking winners can't work, or is it just part of the bumps of the process?
Yeah, no, I think that that's definitely the right question to kind of keep in mind as this plays out. I don't think that we really have an answer yet, but I don't
Mhm.
necessarily think the idea is flawed either, of that if you think chips are really important to your national interest about trying to figure out how to get those manufactured in the US, how to get those uh, into the hands of this AI big demand wave and having like some government support and subsidizing some of these efforts, I think is important because, I mean, like to what you said, if Intel had, a big pile of cash that they weren't gonna have to pay interest on or weren't gonna have to raise in the equity markets, that they could just, build this foundry business and not care if they had a customer down the line and just start making stuff and seeing who wanted it. Maybe that could be a path forward, but they are really constrained by the money and the economics. So and maybe this will work, maybe it won't. But I think that this is like kind of a great story to like just keep following to see like what the end of this is going to be. I wanted to just pull out like I found this quote from their earnings call of this guy asking a question that I thought was good. Um, this guy Stacy Rasgon, so credit to him, says, just to push on that a little bit. I mean, you guys have your own factories. Like, why are you in the inventory situation that you're in? I get the whole idea about finished goods versus other stuff, but I mean, you have $11.6 billion of inventory, and yet it's not at the right place at the right time to sell. Like, how does that happen? Uh, and I think that does seem to be the right question. That these guys, like, if you look at their balance sheet, they publish all this stuff, and they were able to have like this big inventory number and but yet they're forecasting down all their revenues for the next quarter because they just don't have enough stuff to sell. So that, I mean, to your question about the government picking winners and losers, is this even like a well-run business? Like, do these guys know what they're doing? Because it seems to me like from the start of ChatGPT and like seeing these hyperscalers, it feels like that we've been talking about for at least 6 months, maybe more, that people in this business should have been able to see it coming, like see that demand coming, and to think that, you didn't make the right stuff when you're the one who produces it, like you can't really blame any other supply chain, whatever. It's got to be pretty frustrating from an investor perspective.
Yeah, yeah, I like how you mentioned kind of the flaws with the business itself. It's like just because you inject money and you're like, okay, we want Intel to do better, doesn't mean that they're actually going to do better. And um, and you have one of their top rivals, AMD, Advanced Micro Devices for server chips, who are you could argue are better run at the moment and doing some great things. You
Mhm.
know, all
Yeah,
things to
and
think about.
right. And just one other thing I wanted to add too is that I think one of the reasons why people like using a firm like TSMC, like thinking about this foundry business to manufacture chips, is that they're also not the ones who are designing them and trying to sell them, like which Intel also is. So, like if NVIDIA were going to say, okay, Intel, like we're going to give you our foundry business and you can use your, we'll like give you the designs for our Blackwell chips and you guys can go out and manufacture them for us, then all of a sudden Intel knows exactly how like these Blackwell chips are designed, which is the most coveted secret of the AI race. So I think that that's also just like a fundamental problem in trying to think about how they're going to get that business online. But we'll see how that plays out too.
Right. Yeah. We'll see how that plays out, and maybe we could jump into our next AI company. We'll spend some time talking about OpenAI and kind of looking back on them leading the way, first mover in this AI world, really consumer focused, and they hammered that. But it seems like the enterprise AI business might be where the money is. So maybe if you want to dive into that.
Yeah, yeah. I mean, this was more even on just the advertising than enterprise, but the thought here is that OpenAI is rolling out an AI or sorry, ad program about how they're going to integrate ads on ChatGPT. So if you were able to just see the screenshots and we'll maybe post these somewhere, but it's just going to be almost like banners on when you are scrolling and say you tell ChatGPT that you're making Mexican food and it'll show you an ad for hot sauce or something of that sort where they claim that they're not going to use any of your personal data or information, but just the things from the chats themselves and what you're asking for. So this is kind of shown, I believe Sam Altman said maybe 6 months prior that ads are going to be like the last thing that they do to get revenue, but it's kind of shown that the internet now, it's really hard to be a pure subscription business like that. That if you can have free tiers and lean on advertising, that's some of the way that businesses like Google or Meta are still able to be real cash cows without there being like any upfront payment from consumers to the company. So I thought that that was kind of interesting to bring up to see. I mean, really, AI monetization should be like a super big question for everybody of how these companies are going to make money. So following that, I think will be important.
Yeah, definitely. And, OpenAI's kind of just been burning cash as of late. I think they're projected to lose $14 billion this year, net loss. So obviously a really tough amount of money. Revenue hit 20 billion. So they're making some money, but I think kind of what this has been coming down to is that some of these other players like Gemini and like Microsoft have these enterprise platforms where they're selling their AI services to these big businesses and working it in strategic ways. And I think when AI was kind of first getting going, ChatGPT just took the consumer by storm. And it's, you almost don't even say like, oh, let me ask AI. You say, let me ask chat. So they clearly did a very good job with that and expanding their network, but it's going to be interesting to see if this ad platform is actually going to work or are people going to be like, oh, this is kind of annoying. Let me jump to Gemini. Let me jump to Copilot, Claude, and also the expansion of maybe their enterprise business as well. So we'll
Right.
see how it goes.
Yeah, yeah, I think that that's all super important. Also to see how they do in the ad business because I mean firms like Meta and Google have really done a good job on getting the right businesses in front of their customers and being able to monetize that effectively. But I mean other businesses, I'm thinking about a business like Snapchat who has a very similar business to something like Instagram, but just has not found a way to monetize it in a way that's had a good impact on its valuation. So trying to figure out is OpenAI good at this? Because I think one thing's for certain is that Google is, and they also have a lot more cash to spend and a bigger runway. And so, I mean, Chat right now apparently has 18 months of runway left before they're going out to need to raise more money, which I think that they've shown that they're really able to do anyway. So I wouldn't worry even so much about that. But at some point, the clock runs out and you need to be a business that is making money and people are going to stop funding it. So we'll see if they're able to do that because the space has gotten a lot more competitive too and they're going to be going against Google for a long time who probably isn't going to need to put any ads on their platform because they have so much revenue from other sources. And there's a risk that ads make OpenAI just overly clunky, overly impact the consumer experience that they lose all the market share in this kind of ad piece because someone like Google or someone like Anthropic can outlast them. But I think that that's another just kind of question to follow is who can last the longest with no ads too. It'll also be a beneficiary maybe.
Yeah, it's almost like, these bigger companies can just endure having no ads until ChatGPT's off the face of the earth and they have the
Then they
they
can
have
ramp
the they
it
have the
up.
market. Yeah, and then they
Mhm.
jack it up. But you kind of look at OpenAI, Microsoft owns a quarter of them. So we were just talking about this when it comes to the semiconductors. Maybe Microsoft is just, I think it's kind of known that they're already doing this, but taking a lot of, um, taking a lot of lessons from what OpenAI is doing and kind of replicating their technology to a great extent. So Microsoft already has a quarter of them, and obviously they don't, need to go out and raise a ton of money at the moment. So I could see them winning this game in the long run. And OpenAI has a ton of VC backers. SoftBank has another 10%. They have a 500 billion dollar initiative to build massive AI data centers. Their project called Stargate. So they have a lot of cash commitments on the moment and a lot of expectations, but you do have to wonder if they're going to be able to meet them and if a company like Microsoft is just going to take all the hard work they've been putting together and outlast them.
Right, right. And I kind of wonder too if there's a chance that Microsoft folds in OpenAI at some point and just cashes out all those different stakeholders because they think that, I mean, if it gets to a point where OpenAI is leaning on Microsoft's money anyway, that having them all under the same umbrella could be something that makes sense. But that could be interesting to see too, because they're all, and even just thinking more broadly, there are two sorts of AI companies. There are ones that have legacy, super profitable businesses like Google and Meta, And then there are ones like Anthropic and OpenAI that are purely burning VC money. And so if there's ever an event that's going to make the capital markets like collapse for those firms, like there probably won't be, unless there is a bailout by Microsoft or others, that there probably won't be an Anthropic or an OpenAI. But those other ones probably will still stick around because of that, and those legacy businesses still generating them money. So an interesting thing to see how these guys kind of continue to survive and fight in what is like a super brutal battle.
Yeah, it's going to be tough, but I think that solution of Microsoft in some way taking over OpenAI is an extremely realistic situation and something that they would want to do because ChatGPT is such a recognized name. It's definitely the most recognized, and they had first mover advantage, so
Mm,
could totally see that happening. I like that.
for sure. And let's pivot into this sports one. I'll let you kind of
Yeah.
introduce this story too, but this is back to our podcast roots. But some and also I think that we one of our earliest ones was talking about NIL as well.
Yeah.
So this will be great, but I want to leave it to you to kick it off.
Sure. Yeah. So Duke won the ACC championship this year, first time in over half a century. I don't know how they won that game over UVA, but had a great year. A lot of it could be attributed to Darian Mensah, their quarterback, who recently announced that he's actually going to enter the transfer portal. And this is kind of where the problem started. So Duke is actually suing him. They have a lawsuit out against him saying that he can't play football anywhere else besides Duke next year, because they have an agreement through NIL that would pay him millions of dollars. So yeah, apparently he can't leave. They're suing, and this is a huge moment for NIL in general, and one of the bigger cases that we've seen. Yeah, it's going to be a real test for how college sports is going to move in the future.
Yeah, I mean, this is pretty hairy that you have I mean, it's kind of the new thing that we're paying athletes now, but it's also, I mean, there are two sides to these obligations that there's one that the players have to show up and fulfill like their side of the bargain, that if they sign a 3-year deal to play with Duke with their NIL program, that being there for the 3 years that they promised and not jumping ship without some sort of remedy back to them seems like the only fair way to go about this, but I mean it's also like the continued death of the student athlete that like you wouldn't say to the I mean, we're both transfers. You wouldn't say to the chemistry student on scholarship at Duke when she like transfers to Brown that, you know, we need receipts back for all the scholarship money that we gave you and grooming you into like an alumni or something. That wouldn't happen. So like the student part is pretty erased from this that I think is it is too bad, but I think that like if these guys are going to make that kind of money, that they do have to kind of conduct themselves almost like a professional, probably earlier than any of us want them to. But I think that's just kind of the nature of the price tag and the cash that some of these guys are getting.
Yeah, yeah, no, and they want to be a part of the big reason they have in the first place is because these programs and networks were profiting so greatly off of their playing, and then it's like I'm the athlete. So I do definitely get it, and it is sad. Obviously, I don't know being a student athlete as well as you do, but um
I wasn't making millions playing, I can assure you.
still a student athlete, but this is a big step for what it's going to be in the future. It seems like everyone just transfers every year. It doesn't even matter really where you go because there's no pressure about, oh, like, you can just transfer the next year and make more money, or you can, go to the school that's gonna have a better chance at the championship if you have a good season. And I think that's all great. And Darian Mensah already transferred. He was at Tulane before, but I mean, from what I am seeing, it does look like this NIL deal runs through the next season. So I don't know if you can really breach that. It doesn't seem like anyone's really breached it yet, but I could imagine this is going to be something that comes up again in the future.
Agreed, agreed. And it's a tough question if look, these students should get kind of infinite forgiveness on these contracts because and then it really becomes the Wild West is that, I'm going to take a 4-year deal at Michigan for $10 million. And the next year I'm going to take a 4-year deal at Miami for 12. And I'm just
Mm.
going to keep getting like rebid up every year. So I mean the combination of transfer portal and NIL is pretty nuts. And I think one thing that I think that we kind of lose in all this is that you kind of lose like some of the great stories of people like sticking with the program and like getting the benefits of being an alumni at that school and coming back and having a relationship with the place is that you have people who graduate that I see who, I'm proud to have graduated from these universities, Charlotte, Michigan, Colorado, Alabama, and oh, I went to all four for 1 year. You just wouldn't have as good a relationship with the people, with the staff there, with the town. And I think that's kind of a special thing about college that we kind of lose. But I get that I mean, that these people really do can't always think about the long term so much, or even like their NFL development so much that a lot of these people come from backgrounds where like they need money to bring back now. So it's kind of a tough thing, thinking about both like their futures and their kind of relationships going forward as well. That there is definitely something lost in the NIL era.
Definitely. I think that I speak for a lot of people when I would say that I would like to see less transfers and I would like to see more people sticking it out. I mean, of course, you know, if someone else is offering you an extra $1 million a year, of course you're going to do that. Like, I'm not trying to judge anyone that's doing that. I just think that if you could find a way, maybe if this lawsuit does work out in some way and we find out that, these NIL deal contracts, you have to stick with it. I think that could be a little bit better for the sport, at least in my opinion, as a viewer. And I enjoy those stories and the people who really resonate with their schools.
Agreed. Agreed. Yeah, I think that's well said.
Yeah, that was a good one.
Yeah, all right. No, I think we'll probably close it there unless you got any final thoughts, but we appreciate everybody listening and sticking with us. 25 episodes is it's a great milestone for us, so we appreciate you all being there.
Boom. Thanks for listening, guys. We're gonna keep pumping these out. So looking forward to this n next couple of big weeks in the markets and earnings, and excited to report back to you soon.
Take care.